Hello guys, and welcome to TTF Quick Tips. So what we're going to be doing moving forward, probably going to be getting a good 3, 4, 5 videos a month. It's just a few quick tips in terms of trading. Mainly this first one is going to be for those beginners, those that are very, very new to trading foreign exchange, those are very new to our signal service as well. And just to really cover the actual position sizes and the lot sizes that you guys should be using when you're obviously trading the markets, to ensure that you're not overexposing yourself to certain trades, and making sure that your risk management and money management is in check. So first of all, just subscribe to our YouTube channel if you haven't already, so that you get the updates as and when we post these new videos. Secondly, just pop a like or a comment as well for us. That would be much appreciated. And thirdly, what I will make sure to do as well is I will put the actual application version alongside this video, so that you can see precisely how we do it, whether or not you're on a laptop or whether or not you're actually just using an application on your phone, such as the lot size calculator. Okay, so you can download the lot size calculator from the App Store. It's available on Android and iPhone, so pretty much should cover everybody. But let's just say that some of the things that we've certainly seen with new subscribers to our signal service, and also new subscribers to our course as well. Specifically when it comes to lot sizes, the common mistakes that are made, first of all, will be using the same lot size throughout every single trade. Okay, and I'll explain to you why that shouldn't be the way it's done when actually trading these markets. And also, secondly, just doing and using lot sizes that are far too much risk for some people's account values. Okay, so we've seen basically people with account values of let's say $500, for example purposes, actually using lot sizes of say 0.25 or even 0.5 per trade. Now the amount of risk on that one trade when you've got that account is way more than sort of 50% of your account value, which is absolutely against our guidelines, and therefore we just want to make sure that everyone knows exactly what they're doing. So all the calculators that you can use are very much the same. The majority of our clients will be on standard lots. Okay, so this calculator is perfect for that. So the first thing you need to do is obviously just choose your account currency. Okay, very simple. Ours is in US dollars. And then just choose your account size, the actual amount that you have in your account currently. So let's just say that's $1,000. Okay. Now the next step is the how much you want to risk, so your risk percentage. Now those of you that have watched our previous video, okay, would hopefully understand by now that we recommend risking no more than 5%. And the average that people tend to risk will be somewhere between 2 and 5%. Now, those that have traded before, those that understand the markets, and those that have a lot of faith in us, maybe using a little bit more, maybe 6 or 7% or so. But the majority will normally be using 4 to 5%, I think, per trade. So let's just say we're going to risk 5% per trade. Now, obviously, we know that the account size is $1,000. The risk is 5%. So therefore, we want to risk $50 on a trade. Now, when we post our trades in our signal service channel, I do always make sure that we lay out the exact amount of pips as we take that position. So for example, let's say we're taking a position and the stop loss in terms of pips is 60 pips. Okay, so we put the 60 pips in here. Okay, and that market we are trading currently, let's just say, is Euro GBP. Okay, all you then have to do is simply just press calculate. It will tell you that you're risking 50. Okay, and it will tell you the units you can ignore, so don't worry about that. But the lots, okay, most importantly, the lot size you should be doing on this specific trade should be 0.065. Okay, now I don't think it will let you do that, so you either do 0.07 or 0.06. Okay, so just make sure that you do this every single time that you are trading, just to ensure that you're not adding too much risk and having too much exposure to specific trades. Now, I'll just show you an example of this. Let's say we're trading GBP NZD. Okay. And we place a trade on GBP NZD. GBP NZD is a much bigger market, and therefore our risk on this trade might be, say, 120 pips. Okay, so double the amount of risk. Now, when we press calculate, okay, you can see here that it's actually 0.06 to be for the lot size on this trade. So very strange, because obviously we're risking a lot more pips. So this just goes to show you that each market is different. Okay, so if we were risking, say, 75 pips on this trade, we can be doing 0.098 lot size, so 0.1 or 0.09. Okay, so just bear in mind that this is always going to change depending on the currency pair, depending on the amount of risk. So just ensure moving forward that every single time you place these trades, okay, you actually just calculate that risk, okay, because it's going to be different on every single trade. So I hope that helps, guys, and honestly, make sure that you're doing this all the time, and that'll ensure that you actually have profitable results ongoing as you follow us and you follow the trading field moving forward. So obviously subscribe, like, comment, and obviously look forward to the next video as well, guys.